basis in April. And so we're seeing kind of that tidal wave of global liquidity that's been very positive for Bitcoin, very positive for kind of, long duration assets throughout the year to date. It's very much started to wane. And so one thing that may be positive, the silver lining that's coming out of this China slowdown, or not slowdown, is just disappointment in the Chinese economy. You may actually get the PBOC back engaged in terms of expanding its balance sheet again.
Darius Dale, one of the best macro investors of all time, has given an explanation about what can actually happen to risk assets such as Bitcoin when the US default or raises the debt ceiling. His prediction for Bitcoin is a very optimistic one. Stay tuned. Let me walk you through Darius Dale's debt crisis analysis and his optimistic Bitcoin price prediction.
I will stay.
While central banks do not manage the fiscal sector of the economy, they do control the money supply. Therefore, they contribute to fiscal inefficiencies and high debt in some way. The United States, as the world's largest economy, indirectly controls almost all central banks due to the world's reserve currency status.
Oh. Okay, I see you.
Darius Dale said in his interview that the European Central Bank, ECB, is lagging behind the Federal Reserve Bank, and they have signaled that they will begin a faster balance sheet decrease so that the European economy does not end up like the American economy.
I honestly think the economy might collapse.
He also noted that, despite the fact that the Bank of England has not yet revealed its monetary policy, it is well behind both the European Central Bank and the Federal Reserve Bank. He highlighted that the balance sheets of the Bank of Japan and the Bank of China differ from those of the Federal Reserve. As a result, they do not allow their currency to rise against the US dollar since they want more countries to import from them.
That's a good strategy.
With respect to the English, not the English, the European central bank balance sheets, they are very much lagging the Fed with respect to their policy. We got the ECB most recent policy decision last Thursday, post the Fed. They hiked interest rates. They slowed the pace of the interest rate hikes, but they also outlined that they're going to be implementing a faster balance sheet expansion starting in July faster balance sheet contraction started in July. So they're kind of just lagging the Fed by a couple of quarters as it relates to their reaction function. Same thing with the Bank of England. We're going to get their policy update in the month for Thursday, and they're very much kind of lagging both the ECB and the Fed. Swiss National Bank, Bank of Japan, PBOC are all kind of in a different boat. These balance sheets are in a very much different boat because they are sort of fighting the kind of traditional balance sheet beggar thy neighbor war, which is down dollar means our currencies go up. We're predominantly export-oriented economies, which means if I allow my currency to appreciate versus the dollar more so than you the Japanese yen, or if I'm the Japanese yen, then you Swiss franc, or if I'm the Swiss franc, you Chinese yuan, then that's going to obviously hurt the relative demand.
So why are other countries not ready to follow a similar balance sheet like the US? Let's find out.
Okay, well thanks.
Subscribe to the channel and put on notifications so you don't miss any of our exclusive crypto news and price prediction videos with high reward that can make you wealthy while improving your crypto investing. When economies spend more than they generate, they tend to borrow more, and their debt piles up as a result of the excessive borrowing to finance the economy's activities. If this continues, the country will hit its debt limit and default, or in the case of the United States, the debt ceiling will be raised so that the country does not default on its debts.
Back on your show, man. So we'll start with the debt ceiling. Right now, we have some really weird, interesting kinks in the money market curves. What I mean, money market, specifically T-bill yields. Over the last couple of weeks, we've seen the 1-month T-bill yield, which is kind of right around D-Day as it relates to when the government is likely to run out of its funds. That yield is backed up over 200 basis points in like 2 weeks. So it went from like 340 on the 1-month T-bill to about 540, and it's heading higher. And so that's clearly an indication of money market investors getting basically saying, I don't want anything to do with this, because obviously if the US government defaults, we're going to have quite a big issue on our hands as it relates to.
What Darius is saying is that the money market is pricing in a potential default on debt by the United States. And if this happens, the US may lose its status as the world's reserve currency supplier and the biggest economy in the world. The United States will not let itself default, so it will surely raise the debt ceiling. This is what Darius has to say.
This is one of the biggest lessons that I learned in my career that's been very beneficial throughout my career, which is Asset markets are the conduit from investors and the real economy to politicians down in DC, whether they be Federal Reserve officials, whether they be members of Congress or members of the White House. And so what I learned from that particular experience is that when you have an impasse or a stalemate down in DC, I like to call it kabuki theater, particularly with respect to this debt ceiling issue, because it always eventually gets extended. You almost need the crisis in the markets to bring both sides closer together at the negotiating table. Right now, Speaker McCarthy's very much dug in terms of calling for, sequestration and cuts on mandatory spending programs, et cetera. Obviously, Biden's dug in with respect to his agenda and the Democrats' unwillingness to pass the debt ceiling with any contingencies. And so it's ultimately, the closer we get to that scenario, again, Janet Yellen has outlined June 1st as that D date for a potential default. It might be a little bit longer, might be a little bit shorter. No one really knows. But the closer we get to that moment, and the less and the likelihood that we don't have a deal in place, the more likely it is asset markets start to sell off in a pretty material way to bring both sides closer together.
What will happen to Bitcoin then? Will it die? Let's find out. Bitcoin is a cryptocurrency that responds to global crisis, liquidity, and global money supply. That is, if the United States defaults or lifts its debt ceiling, Bitcoin will react. Bitcoin, like gold, increases during a crisis and falls during a healthier global economy as investors become risk-averse. In 2022, when the US economy was very strong, crashing almost every single asset, and even currencies, Bitcoin suffered a serious crash, dropping more than 70% in the year. In 2021, when the US economy was weak, Bitcoin rallied. Using the same analogy, if the US defaults, Bitcoin is going to rally to an all-time high price. Shibarium will be launched this year, but in the meantime, the Shibarium beta is out and has been a success. If you want to know how to make thousands of dollars from the Shibarium blockchain, check out our video analysis on the Shibarium beta launch now.